Can you answer this question as a trader? The confidence of which you answer this question determines the level of your profitability. Do you know exactly where to buy? And do you know exactly how to buy or to sell? Trading is about buying and selling. But you don't buy and sell anywhere and anyhow. Just like in a physical market scenario where people comes to do buying and selling, there is always a place called market setting. That is where people comes to buy and that is where people comes to sell. So the same thing is applicable to trading. And when you come to the market generally, there is a specific goods that you want to buy. And there is that location of the market where you can get these goods. Now let's come back to trading. The same thing is applicable to our trading. When you comes to trading, it's a general market. When you open your chart, it's a general market. But there is a zone in which you are looking for in order for you to sell. And there is that place where you need to buy. Another thing is when you get to that place you want to buy, how do you buy? Or you want to sell, or you are already at where you want to sell. The question is, how then do you sell? So in this video, I'm going to take you to how you can identify several of these zones. In case you don't know, high probability zone, and then how you can buy or sell as far as trading the financial market is concerned. We all know that trading is very risky. It involves financial risk. And as such, you can't afford to be gambling with your money. So having established that, now let's look at what exactly to do. In the previous video, we have discussed about the market structure. If you are coming across this video for the first time, I will recommend you watch the video on mastering market structure before this. Now, having discussed our market structure, the next step for us to take now is how then can we take advantage of this market structure that we have learned. Looking at this, it is the market structure first that helps us to determine whether to buy or to sell. So in this price scenario before me, you realize that price is moving this way, higher high, higher low, higher high, higher low, higher high. So obviously this is an uptrend. You will agree with me. So price push to this upside and then price return and break this structural point. And in our previous video, we said price is not permitted to take the higher low when we are in an uptrend, because that liquidity is not meant to be taken if we must maintain the existing trend. So now price have crossed here, so we now have what? A break of structure. So once structure has been broken, it means the current trend of this market has been compromised, which means we are now looking for opportunity to sell. We are no longer looking for a buying opportunity. So by trend, we now know what to do, right? Now we know what to do. By the trend, we know that we are in a selling market. So what are we going to do? We want to sell, right? So the next question is, where do we sell? And one of the places we can sell is in our order block. So the question is, what is an order block? Now you will agree with me that each of these movements that you are seeing to the upside are candle representatives. So here we have the last bullish candle, and this is in a downtrend. So in a downtrend, you will be selling in one of the places you can sell is a bearish order block. Bearish order block. Now, what is a bearish order block? The bearish order block is the last bullish candle before this bearish move. And now I know you are wondering, if you said it's a bearish order block, why is it not a bearish candle? This is the idea behind it. This bullish candle was the candle that carried the order. They are already load of sell, 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 sell. As you can see that this candle has a wick. So there are series of sell trade in that candle, sell, sell, sell. Then eventually when it is more than that of the buyers, it now take the next candle down. So the last bullish candle at your structural point, the last bullish candle at your structural point is your bearish order block. While the opposite is for a bullish order block, the last bearish candle is a bullish order block. So having established that, now where do we sell? We have identified one of those points, either to buy or to sell, whatever it may be. Where is it? It is called an order block. So we now come, we mark this order block completely, either by wick or by body. We mark everything completely. So in this scenario, you can see how the order block has been perfectly marked. And this was done after we had this break of structure. So what is the next thing? We are now waiting for price to return into this order block. So price came down, and now that price is down, we want to see price return back into this order block to mitigate this order block. And that is why we call this pullback, we call it mitigation move. So price move back to that order block in order to get mitigated. Now the price has returned into this order block, right? On this higher time frame, what is the next thing we need to do? If you see this move, this is the move that went to the upside, and then we have this break of structure. So on a lower time frame, this move will be moving this way again. It will be giving higher high, higher low until it returns back into this order block, and then it will break structure again on a lower time frame. So you are still going to mark the order block of a lower time frame, and then you wait for price to pull back into it, and then you take your trade to the downside. Whereas on this higher time frame, you will only be seeing a straightforward movement of candle. But on the lower time frame, you will be seeing a structural pattern. For instance, on this 50 minutes, you will be seeing a structural movement pattern. But on the main time frame where you mark your point of interest, such as 4 hours, you will only be seeing a straightforward movement of candle. So once price comes to your lower time frame, break structure again. Now, because it comes up in a bullish way to break structure on your lower time frame, giving you another bearish movement, you now make your trade entry. So this is one of the place we can buy and sell. Now this is applicable to either an uptrend or a downtrend. Then number two, where can we buy and sell? Remember, I just explained now, I just explained two ways we can do this. Okay, I just explained one way. I said we can go to our lower time frame, 15 minutes, to look for a break of structure, which means that on the 15 minutes, you'll be seeing price moving this way. I am representing this movement here on the 15 minutes. So on the 15 minutes, you'll be seeing price doing higher, high, higher, low. Then you will wait when price come back into this order block on the 4-hour time frame. This is what you will see on the 15 minutes. But on the 4-hour, you will see a straightforward movement. Then on your 15 minutes, price will break structure again. Do you see that? So you will now need to do what? Identify your order block on the 15 minutes. Then price will pull back into the 15-minute order block and then mitigate it, and then you will see this move will occur. Now, if you are to make this entry on a 1-hour time frame, then you will not be able to get this particular structural movement if your analysis starts from a 4-hour. Maybe what you will get is a candle movement back here. So how do you make this entry? We are looking at how. One, we have discussed how by using break of structure. Now, the next question is how again? By using a candlestick formation. So what candlestick do you want to see? You will now see a bullish candle return price into this zone, a bullish candle. So for you to sell, you will now need a bearish engulfing candle for you to be able to sell. So immediately you get your bearish engulfing candle from that zone, you now place in your sell trade. So let's move to the next agenda. Now, which other way? By trading the breakers block. By trading the breakers block. Now, this is how it looks like. Here, price came down beautifully well. We are now in a downtrend. So, let's take advantage of this. Price came down, right? Price pulled back. Can you see that? And then price pulled down. So, we are in a downtrend. Here is our lower low. This is our lower high, and this is a new lower low. So, now look at what happened. This point, this is our structural point, right? So price left here and break this structural point. So here now we have a break of structure. Okay, so the question is, where again can we sell in this scenario? Another place we can sell is the breakers block. The breakers block. So the question is, which candle is the breakers block? Remember, in this scenario, this is our order block. We said in an uptrend, the last bearish candle before the bullish move is what we refer to as an order block. So this is our order block, right? So now, what is a breakers block? A breakers block is the last structural candle that price break out of in order to give us a break of structure. That last structural candle at that structural point that was broken, that is what we call breakers block. So in this zone, price was here. Now price is not permitted to break out of this bullish candle because this bullish candle initially is supposed to be our order block in this sell trend. So price went and then did what? Price break out of this candle, which is supposed to be our order block. So instead of this candle now to be an order block for this downtrend, it automatically becomes a breakers block because that was the candle that was broken in order for us to have a change of market direction, which is the change of trend. So now, this is now the question. Where can we sell? We can sell from what? From a breakers block. So, in next time you are marking your point of interest now, you have two places now based on this lesson for you to mark. Number one, you have to mark your order block. So this is your order block. Number two, you need to mark your breakers block. You have to mark your what? Your breakers block. So number one, order block is marked. Number two, breakers block based on what we have discussed so far. So in essence, remember we have discussed how you can sell. So in this scenario, if this is a 4-hour time frame, price has returned here into our breakers block. The goal is if price break out of this breakers block, then it will come and retest this order block before buying up. But in this scenario, price pulled back and stopped. Price pulled back and stopped inside the breakers block without reaching our order block. So this is OB, this is another block. So here is our breakers block. So now that price has returned into this breakers block, in this scenario, let's assume we want to use a candlestick pattern. So we'll be using a pin bar candlestick pattern. So you can see that pin bar. This is our pin bar candlestick pattern. So at the close of that candle you buy, and then your stop loss is somewhere here. But now your ideal stop loss is not supposed to be here. Okay, your stop loss is supposed to be below this order block because price can still go up a little and still choose to return back and mitigate this order block before going up. So the right stop loss is not here. This stop loss is supposed to be below this order block. So now if you are to do this using your candlestick pattern which we have discussed, if you are to use a break of structure, when price was coming down on a lower time frame, you'll be having something like this, right? Then what do you want to do? Once price come into this breakers block, in a lower time frame, let me extend this breakers block this way. All right, beautifully well. So you'll be seeing price coming in like this. That is on a 15-minute time frame. So you will now want to see price break out of this structure. So when price break out of this structure, you will mark the other block on the lower time frame. And once that is done, you are now expecting price to pull back again. Then you can buy and continue to the upside. Now, that is one of the advantage of the break of structure on how to make entry over candlestick pattern. In candle, you can be manipulated. Although the break of structure can still be manipulated, but there is more certainty to it because you saw break of structure and possibly a liquidity sweep. So the breaker block and other block is one way we can do that. Now, what other point of interest? Where can we sell? A brief recap. We say we can sell as an order block. We can sell at a breakers block. Which other zone? Another zone is fair value gap. Fair value gap. Now, what is fair value gap? Some call it imbalance. So, depending on what is convenient for you, you can call it imbalance. You can call it improper price action. So now the question, look at this carefully. We have this movement of price. Price was moving this way. Price went up, came down, and then we have this push to the upside, right? So now price has come down, and then we have a break of structure. And now that we have a change of market direction, what do we want to do? Price now pull back. So now, in this movement where we have that compromise, in all of this movement, we need to identify our order block, right? Just as we did the other time. Okay? So here, this is our order block. So we have marked what? We have marked our order block. This is our order block. And now that we have marked our order block, okay, we need to do what? We need to identify our fair value gap, which is the imbalance. So let's go a bit on another page to see how exactly we can identify this fair value gap. So in order to identify this fair value gap, look at this candle movement. We say fair value gap, it shows the gap of the candlestick chart that create an imbalance in the market. Now, if we are to identify this fair value gap, first, let's say we have a bearish candle. There is a video on this channel on how to do that already, but let's proceed. We have this fair value, we have this candle, and then we have this next candle that form. It overlaps this particular candle, and this one has a wick. So you are seeing that there is a connection between this candle and this candle. Then on the down part, we have another candle that was formed separately. So you realize that there is a void in between all of these zones. This candle is supposed to overlap this one, and it's supposed to overlap this. So there is this overlapping that is meant to happen in candlesticks. So here we don't have that. So you can see, if you look at this scenario carefully, you can see where this first candle stopped, and then the subsequent candle that formed, you can see. So there is this void. This first candle was supposed to overlap the front of this middle candle, and this back one was supposed to overlap it to the upside. And that is why in most cases, you will realize that price are having wick. So that is exactly how you can identify that. So we are going to trade fair value gap is part of where we can buy or sell. So look at in this scenario, this order block stop here. Do you see that? And then the next candle that follow this bearish candle stop here. So in that case, this gap here becomes our order block because the candles were meant to overlap each other. And if you can observe carefully, look at this point. This bearish candle stop here, and this other bearish candle stop here. So there is an imbalance here. So this price came all the way down to fill into this imbalance. You see it? When it fill in that imbalance, it reverses. So one of the characteristics of a valid order block is that there will always be an imbalance. That is to show that there is an institutional movement in that zone. So it was this imbalance is one of our point of interest. So there are instances that price will return into this imbalance, fill 50% of the imbalance, and reverses from that zone back to the downside. And there are instances where price will fill it 100%, just as in this case, price fill it 100% and then retest the other block and continue back to the downside. So please, it is very, very important that we take note of this. So we have identified 3 points we can buy, and already remember, how do we sell? We will need a candlestick formation to sell or a break of structure on a lower time frame. I've already explained that, so there is no need going over that to avoid the video being lengthy unnecessarily. So where is the next place for us? The next place is we can sell inside of our, we can sell in our smart money cube. We can sell in our smart money cube. So what is a smart money cube? A smart money cube is the opposite candle you will find inside a series of candles. Look at here, we have bullish candle, we have bullish candle, then suddenly we have a bearish candle. Do you see that? We have that bearish candle, and then it now continue with bullish, bullish, bullish. So that opposite candle you will have in the middle of subsequent candle is what we refer to as a smart money cube. Like this one now, this is not a smart money cube, and I will tell you why. It's okay, we have bearish candle, we have bearish candle, then we have bearish candle, but we do not have another bearish candle. So it must be in a series of similar candle we find opposite candle. The series means that it is the same kind of candle pattern and candle formation. Okay, so it's the smart money cube. Now, and that smart money cube, it is called demand here because there are orders in it, and that is why you see it different. There are orders. There is an attempt of sellers to take price down, and then this price here you are seeing is this buy order. Sellers attempt to take price down, but buyers overpower them with so much order and they take price up. So that is why we call it demand zone. So when you hear demand in trading, we mean buy, and when you hear of supply, it means sell. So please take note of that. So now this cube is in existence and we are in an uptrend. So here is our structural markup. Let me do that quickly. Higher high, higher low, higher high. Okay, sorry. Higher low, and then higher high. So look at this here. We now mark our what? We mark our smart money cube. Having marked this smart money cube, we are now waiting for price to return into it. So you see now price came in to give you a bullish pin bar, and then you buy. Again, your stop loss is not meant to be here. Your stop loss is meant to be under this order block. Okay, this is where your stop loss is meant to be. You don't put stop loss directly under the cube. Price can decide to pass through it and then retest the order block before going back. So remember, you can use this candle pattern, or you can use your break of structure, which means on your 15-minute time frame you'll be seeing price moving this way, and when price come inside, you will now want to see price break the structure first. You see that? Then you will come again and then mark your order block, and after marking the order block, you will now want to see price return back into it, and then before you take your buy to the upside. I believe this is well understood. So this is how it works. Remember, if you don't have difficulty in marking, identifying your structure, which we have done in the previous video, you will not be having challenge in marking all of this, because first you determine your structure. Your structure tell you what is the type of market. Then after that, you need your point of interest, which is what tell you where to buy. And we say we can buy at order block, we can buy at the block breaker, right? Order block, we can buy at block breaker, that is 2. We can buy in our fair value gap, that is 3. And then we can buy in our smart money cube, that is 4. So you are going to look out for any of these zones in order for you to make your trade entry. This video is long. We should have gone into the practicality of it on the main chart, but we will continue the part 2 in the next video, where we will go to the main chart, identify each of these structural points, each of these point of interest, and then we'll now move to our 15-minute time frame to see how price came into that zone and how price gave us a break or structure on a lower time frame for us to buy. But for now, this is your assignment. Kindly watch this video. Go back to your chart. Learn how to mark your order block, your breakers block, your fair value gap, and your smart money cube. Mark it correctly. There is a link in the description of this video. Click on that link and join the Telegram group and send me what you have marked so that I can help you to assess it, whether it is correct or not. You can see that I'm indirectly giving you now a free mentorship. So thank you for watching, and if you are yet to subscribe to this video, what are you waiting for? Go ahead to hit on the subscribe button and do not forget to turn on your notification bell, like, and please share this video. Thank you and see you in the subsequent video.